All right, ladies and gentlemen, I hope you had a wonderful weekend. We have a very crazy week ahead of us, and I'm bringing it back. The stock market is going to go crazy this week. We have a ton of things, and first thing is first, we have a ton of debt ceiling drama. So if you don't remember what happened on Friday, it was a breakdown of the talks. You even had a market reaction. The GOP negotiators, they walked out. Even on Friday, Yellen, she brought up during a debt ceiling meeting something about the banks needing more buyouts, but all of this was happening on Friday during Powell. We had a pretty decent sell-off day, but I mean, look at the daily chart. We're still up there. Don't forget, there was all of that optimism on the debt ceiling leading into it. So pretty much Friday was a breakdown of talks. We were waiting for this Sunday to have something, and now, well, we had some interesting developments over the weekend, and it's looking like we are going to have to be dealing with a little bit of a dance moving forward. So I'm going to go over that. We're going to go over this week. I even have the lottery plays for you. Yes, we have a play for the debt ceiling, and pretty much low risk, high reward. That's the only way to go about it, but we'll cover all of that. But this week, I'm telling you, even beyond the debt ceiling, we're going to get a ton of data. So Chad, make sure you guys are subscribed, drop your thumbs up, all of that good stuff. But today is Sunday, tomorrow is Monday, and this is the random account generator, and I messed it up. We were up on something last week, and I did not sell it. I don't know what it was. Nobody reminded me, but even then, we messed it up. But Chad, it actually was doing pretty good, and I need your help. I need you to post a random option trade. Keep it below $100. Strike price expiration, all of that. Post it in the comments, and tomorrow we're going to do a random comment generator and see what we get. But Chad, we need your help for it. I feel ashamed. I messed up, but let's talk about what is happening. So again, Friday was a very wild day. Again, even Powell was speaking, but for the most part, he said the same thing he's always said. The only new piece of information he gave, he said that the Fed is not expecting inflation to come down as fast as the market is thinking or pricing. So that was pretty bearish, but most of the reaction was all on this debt ceiling stuff. Again, leading into this week, everybody's been worried about what's going to happen, and even if there is an agreement, we've been talking about what could happen in terms of refunding and all of that. So the big focus was the debt ceiling, and now over the weekend, here's how things move forward. Friday was the breakdown. GOP negotiators walked out. Then on Saturday, McCarthy and McHenry, the bow tie guy, well, they were tweeting like crazy, and they were even saying Biden wants to be the first president to default, and they were talking smack, and that was the bad news. It did not look like talks were getting any better from Friday, aka they got worse. So that was the bad news, but then we pretty much heard this morning, they're like, hey, we're still going to restart talks tonight. They could be productive. And then there's news that Biden and McCarthy will be meeting tomorrow. So this is where it all gets interesting. One, we're getting a lot of back and forth, but now we are officially entering into that 2 weeks that we've talked about, but hopefully you're seeing it right now. Saturday or Sunday, this Sunday today, we were expecting a deal, and then we're like, okay, maybe it won't be a full deal, at least like an outline, and now they're saying, hey, we may have a productive talk. So this is a complete walk back of what we saw, and now this is what everyone's saying over the weekend. We want to see how the futures react, and really now, how does the market take it? So this back and forth with the debt ceiling, pretty much we're going to hear what the talks are tonight. So far, most of it seems negative. We'll see what happens tomorrow, and then tomorrow afternoon, Biden, McCarthy, that'll give you the next update. And then in the meantime, now we watch how the market reacts with just under 2 weeks with no outline in place. So we're going to see. But now, this is what I'm saying. This week is not done. Not only do you have the debt ceiling stuff, you are also going to have the Fed minutes on Wednesday. Then you're going to have the PCE on Friday. Then there's a bunch of PMIs even tomorrow. And then even throughout that, you're going to get like GDP data, regional banks. I think there's still Philly Fed services. There's going to be Kansas City services. And I think one more. I think you even get Richmond Fed as well. And then on top of it, you're probably going to hear from, I believe, like 5 or so Fed speakers. And even over the weekend, Kashkari, he was saying how he would support a Fed skip. So if you don't know, maybe I'll have to make a video on that, but it's in the early stages of the narrative. People are talking about a skip, not a pause, not a cut, not a hike, but a skip, where they communicate this idea of like, hey, let's all have a ceasefire on rates for one meeting and then go back to freaking out how we were. So we'll see how that plays out. But what I'm trying to tell you, this is a lot of data, and we are going to have a ton of opportunities to move. Now, hopefully I can make it simple, and I'm going to try to. Last week, I didn't think that much would happen. We did kind of come back to the range on Friday, but we moved a lot more than I was expecting. But the way I'm looking at it this week, there's a ton of opportunities to move from the data, maybe even regional banks, but debt ceiling all the way down to the minutes and PCE. So if everything is good and we don't get any like super major bad headwinds, I think we could go to 4,300. If things don't do good, I think we kind of come all the way back down to the lower end, and then we could end up this week at 4,100. The point is, I am hoping, but I also think we should get a lot more movement this week now, given the types of events. But hopefully, or maybe it might be a lot of swings back and forth, and then we just kind of see where it ends up. But that's the main breakdown. It's going to be an exciting one. I hope I see you there. But now let us talk about the plays. So we've been talking gold and bonds and all of that, but now I want to talk about a strategy. We've been covering this on the live stream, and I made a play on Friday that pretty much highlights what I am trying to accomplish with it. But these are what I call the lotto plays, aka the debt ceiling, everything going on, the gold hedges, the yen, the bonds. Again, it could even tie into the Fed and the rate hikes, but just focus on the debt ceiling. Again, there's only $90 billion in the Treasury. There's no outline by this week. We only have so much time. The closer we get to it, the volatility should pick back up. The whole idea is nothing should happen like this 70 or so other times. They either get a delay or they get a deal, but nothing bad happens. The United States doesn't default. If it did, though, this is where you want to have a lottery play, but also in the run-up now, if volatility picks up to the day or so before the event, these volatility plays, I'm assuming they will go up, these lottery plays. But what I mean by lottery is that it's a low probability. Should not be your base case, and it's not expected to happen. But the idea is find a trade with a defined low amount of risk at the front with a lot of upside in case the hedges go up in value, or if the event actually does happen, you will be able to make 10, 20, 30 times the investment, and then your downside isn't going to be more than what you put in, so that if the hedges unwind and nothing happens, you don't have any risk. So maybe it's a lot of talking. I just want you to understand it, but here's the simple concept of it. What I'm saying is out of the money bond plays, out of the money gold plays, and I'm saying out of the money because I'm saying utilize options. Why I don't want to go with shares or futures is because, like we're saying, if things end up good and this all turns into a positive development, you see how the market already reacted on the positive optimism, the hedges will unwind. Even gold and bonds leading up into this week, they already unwound a lot. Even on Friday, they got a little bit of a bid, but overall, gold and bonds got killed during this last week of optimism. So the idea is you want to limit your downside, because if something ends up good, well, then you don't end up losing too much. And then the case is, if the risk starts to increase, the negotiations get worse, or the event actually ends up happening, you will have a hedge that costs you a little bit amount of money and that you will have a lot of upside. So here's my example. What I ended up doing was a option on a bond future /ZN. Now, this is not a recommendation. You should not trade this. I am a degenerate. I am going to lose money on this like I always do, okay? But listen, you are not supposed to make this trade, especially if you do not have or never traded futures. If you want to trade futures or you want to try this, I would paper trade it for sure, but do not try this at home. It has a lot of leverage. The good side about it is that the downside is limited given that it's an option, but depending on how close to you are to the money, if it goes in the money, then you have a whole different beast you're dealing with. But what I did is I bought out of the money calls on these bond plays, and my idea is if the fear picks up, if the negotiations take long, or if the event actually happens, buying some of these options. I spent like $1,200 total for the 119s and the 124s, but if the event happens and the bond yields start to get bid and people freaking out, I'm assuming these could return me a lot. Even there's like a spread, it's like $1.50 difference, but this one is like 1,000 to like $1,500, 15,000 max gain. So hopefully you see where I'm saying. A lot of upside in the event of volatility. If nothing ends up happening, you shouldn't lose that much. So I put around like $1,000, and then I'm going to get ready to close out plays as we get closer to everything, and then ride those out, read the data, then see where we are with everything. But Chad, let me know what you think. That is all of it, but this week is going to be exciting. Don't let me break the table, but Chad Adonia, that is your watch list, ladies and gentlemen. Make sure you guys are hydrated, healthy, ready to go. Make sure to post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember the appetite. Your appetite will get you into good situations, and it'll get you into bad situations. You gotta control it. Keep the stamina. Control your appetite. You got 6 more months, or 5.5. We're almost halfway through. But Chad, it's gonna be wild. We have a lot to deal with, and if you stay in that game, think about the long term, the future self as well, and control the appetite. I think you're gonna be good, baby. But let's go. I hope you get a lot of rest, and it's good to be back. Get ready for it. You like it? You like it? Make volatility great again? No one knows what this shirt says. I always get in trouble for it. You know what I'm saying? It's okay. We got it, baby. It's good. It's a classic. It's a classic. It's... Okay, I love it. Was that awkward? Horn.